Name still on my ex's mortgage. My ex and I got divorced in January and my name is still on the mortgage, per our agreement. She got the entire house through the divorce. I didn't want her to have to refinance, got it at 3 in 2020, so we just wrote into the papers that I wouldn't be financially responsible if the payments were late. Not really sure if this will hold up, but oh well. I'm looking to now start my own business and looking at loans. If I apply for a business loan, will it make my ex refinance her mortgage to take my name off? Can I apply for a loan with my name still on the mortgage? Can I apply for the loan and exclude my mortgage asset? We have 2 kids together and she would need to sell the house if she had to refinance, and I really want to keep my kids there. I feel I'm in a lose-lose spot here. Either I refinance and my ex loses the house, or I apply for the loan and my ex is on the hook for the success of my business venture. Edit. Thanks for those offering actually help. I didn't know about mortgage assumptions. I have good reason to think that we could apply for that and get accepted, so really appreciate those recommendations. For everyone else, it's now become very clear to me why divorces end so bitterly for the majority of people. Good luck with your future armchair marital advice. As long as your name is listed on the old loan, it will show up on your credit history, and be factored into your DTI ratio. Your divorce decree won't supersede that. So while you can apply for credit, that loan will be factored in. And this is why you get a lawyer. Husband and his ex-wife split. She is a lawyer, BTW, and she stayed on the mortgage, he kept the house. Whenever she applied for loans before we sold the home, her lenders would require the divorce documentation noting that she was no longer responsible. It really wasn't a huge headache for any of us, and it allowed him to keep the house and her to have cash on hand when she needed it. She took the savings account. Also, assumable mortgages are rare. I worked in loans for quite some time, and assuming a mortgage has very specific criteria. Good luck. You gave your wife the whole house. Interesting strategy here, unless you had ample commingled savings that you took in return. Having your name on the mortgage will definitely impact your ability to apply for secure a loan. The mortgage is a liability in your name, whether you are paying it or not. Lenders look at income to debt ratio prior to lending money to ensure you have the ability to pay back the loan. More liabilities, debt in your name means less ability to pay a loan if your income is fixed, of course. You shouldn't have to refinance to remove yourself from the house. I just went through a similar things. Get an assumption. As long as your loan servicer is fine with it, your ex will assume the loan without refinancing. Fairly easy process, similar to actually going through closing again. There will be a small fee. My ex purchased a house while we are separated which required my signature on mortgage. I was assured by Mortgage Co and a lawyer that I was fine as long as I signed away dower's rights. Well, fast forward a year, after divorce is finalized etc., house decreed hers and a creditor summons for court comes in. They said my dower's rights meant nothing to them, but they took me off the complaint since I had the divorce decree. Why MMV? Your divorce lawyer should have said to you, sever all financial ties. If he didn't, that borders on malpractice. You have absolutely no control over what she does with the house payment. Not saying that she wouldn't pay the mortgage, but your financial life is no longer in your own hands here. Yep. This is certainly a lose-lose spot. You really can't get both of the good world of being a father versus not suffering consequence of being a good father. If your ex is gracious enough, ask her to refinance with just her. She really has no reason to do that, as it is detriment to her. That's what divorce is. She has no reason to sacrifice herself for you. Your divorce arrangement for the house was pointless. Banks don't care. And unless there's no way she could continue to live in the neighborhood, doing it for the kids is silly too. I guarantee the kids don't care about the house as much as you think they do. All that aside, if you want to get a business loan, you should really look into forming an LLC and getting a business loan with that. It would protect all sorts of things. I am neither a lawyer nor an accountant, but an LLC is a good way to keep your business from interfering with your personal estate should things go wrong. I lend to business owners. The problem you are going to run into is that most traditional lenders won't give you a loan for a startup without going through SBA. SBA is going to see that home as an asset and they are going to require that it be pledged. Basically, I don't think you'd be able to qualify for an SBA loan with that home showing as a liability on credit and not being able to pledge the home. The real question is, why did neither of your attorneys know about a mortgage assumption? Sounds like they kinda sucked. Your name is on the mortgage. Call them up and see if they do assumptions for that loan type. Since you're confident she'll make the payment, she may qualify for the mortgage herself, she'll keep the rate. Not common, but they do exist for this very thing. Nope. Get off it now. As soon as possible. You divorced for a reason. She's benefiting from you being kind. Sure, you have 2 kids together and it sucks that she will have to sell it, but she's going to be just fine if she sells in this market. Your name is on a lien on the property, regardless of what happened in your personal life. If that lien defaults, you go down with it. Confidence in others is dangerous. Refi, get your name off ASAP. Does your decree of dissolution state any of this? You will have that mortgage counted against your debt to income until it no longer exists. You can get other loans and mortgages, but they will be impacted by the existing debt. Not ideal, but doable. Banks don't care. You're on the loan and responsible for it. Regardless of what the divorce judge said, you'll have to go to court again to contest it, and it is a pain in the ass. That being said, you applying for another loan will not affect your previous loan. But the previous loan, and its current standing, can and will affect a new loan attempt. Not financially responsible if payments were late. Sounds good in theory, but I don't think that will be a thing to your creditors if a payment is late missed. I take it you never spoke with an attorney. You'd better lock the title on the home too so that she can't refinance against the house. You're 100 on the hook for the home's debt. Now your business loan all depends on your current debt-to-income ratio, so they may say you won't be able to qualify with your mortgage or you're fine. They won't care per se that you are on a mortgage or not. They just look at the debt. What state are you in? People change. That's why y'all got divorced. Not using an attorney when kids and assets are involved was a mistake. So, basically you do have a mortgage. My name stayed on the mortgage after we divorced because the mortgage lender wouldn't remove it unless my ex refinanced, no matter what the divorce decree said. The divorce decree did state that I was not financially responsible for the mortgage. When I bought my own home, I just had to show the new mortgage lender the divorce decree. It didn't affect anything for me, and my credit stayed great. When I got divorced 23 years ago, I was able to have my ex-husband sign a quitclaim deed. It did not require any refinancing. My friend married a guy who still had his name on the mortgage to his ex-wife's house. He had quitclaimed the deed to her when they divorced. He wanted his kids to stay there, etc., and paid sufficient child support in order for her to stay there plus care for kids. Ex-wife decided to quit paying, was foreclosed on, and house was sold by lender. The bank then came after my friend's husband for the entire mortgage amount, forcing him to declare bankruptcy as well. True story. Why has nobody here suggested that OP have their wife do assumption of liability for the loan? That should allow it to transfer without affecting the loan as long as she can qualify. Request for more info: what type of mortgage, FHA, VA, USDA, or conventional, who is servicing the loan, and what state. Government loans can be assumed, which may take you off the loan. Conventional loans can be modified to be assumable if the loan is portfolio. Business loan companies may not count the debt against you if evidence exists of your ex making the payment consistently from an account of which no money was contributed by you. Lots of bad advice or advice from people who aren't in lending in this thread. Don't panic. Focus on the solutions.